Dow component Nike warning sales will drop by a double-digit percentage in the current quarter as the company faces new tariffs, sliding consumer confidence, and a slower than expected corporate turnaround. Joining us now on the company's just completed quarter, Kevin McCarthy, portfolio manager at Neuberger Berman. Kevin, great to have you with us. I don't know if you agree with the slower than expected turnaround. He's only been in the job, Elliott Hill, that is, since October. In terms of the guidance they have given, do you believe that that's probably the kitchen sink?
Yeah, no, I think they're making every effort they can to be as transparent and conservative as possible at this moment by providing guidance every 90 days. They're trying to, visibility is a very key, important thing for them at this stage. But, I think the quarter was really candidly less about the numbers and more about really trying to understand the magnitude and timing of Elliott's win now strategy. And, I think we've moved on beyond the point where we know that he's the right guy with the right strategy for the job. It's a matter of starting to see some of the KPI proof points emerge at this stage.
Okay, so what do the proof points point to you in terms of when we should start seeing? I mean, for instance, when you guide gross margins down 400 to 500 basis points, that's a pretty big decline considering that the prior quarter had also been down. So in terms of the cadence of those sorts of, what are you anticipating?
Sure.
In terms of the cadence of these declines, do you expect more to come, or did you think that was pretty much the worst given the points that you've seen so far?
So 400 to 500 should be the peak, and that should be next quarter. But what that tells me, and we're working off 350, and then it should be kind of a gradual improvement throughout fiscal 26 with revenues gradually improving. But really, I think the message and what this tells me is that Elliott is being, he's very eyes wide open with understanding that he can't take for granted the right to re-earn the shelf space. He wants to win. I've met him before. I know he takes Nike winning very personal, and he's going to do what it takes to reinvest. So I think, as it relates to kind of where you're going with some of your questions in terms of what does this mean for earnings, this does mean some short-term pain in terms of that's going to be easing throughout probably fiscal 26, which ends in May. But you could easily make the argument that 2027, the bogey might not be any different from where, given the kind of the acceleration in the investment that is taking place right now.
Okay, so given that timeline, is Nike worth 40 times forward right now?
Well, I think you're an interesting. I've heard the phrase that it's a PM dream and an analyst nightmare, because for a PM you're looking at something that's got 20-year gross margin lows, a new beloved management team coming in to reboot, and you can dream the dream, and you can see meaningful increase, but as an analyst, you have very few near-term data points to kind of hang your hat on. So you're saying earnings is, kind of stuck right now. So yeah, I could endorse the view and say this is a 35, times earnings number, or I could say, you know what though, there are legitimate efforts and investments underway for Nike to redefine the bar of excellence in the athletic apparel and footwear industry.
So you don't think it's worth 40 times forward?
I think it's a combination, and I think right now I would describe the near-term alpha opportunity as modest, but I don't think you get the unlock until you start to see some of these more tangible KPIs emerge, and I think that happens over the next several quarters.